I hope you're all good and safe. So this is a practice question on bad debts and provision for doubtful debts, and we are doing it from 25.4 Frankfurt. So let's read the question first. A business which started trading on 1st January 2014 adjusted its allowance for doubtful debt. Allowance is the another name of provision for doubtful debts. Okay, so allowance and provision for doubtful debts, allowance for doubtful debt is the same thing. Allowance for doubtful debt at the end of each year on a percentage basis, but each year the percentage rate is adjusted in accordance with the current economic climate. As I have told you in the previous lectures, that provision is an estimated loss, and this loss is dependent on several factors now. So that's why the rate may varies. So in this case the rate is varies due to current economic climate. The following details are available for the 3 year ended 31st December 14, 15 and 16. So these are the information of 3 years. The first column here has given you the bad debts for the year of 2014, for the year of 2015 and the year of 2016. So yeah, the bad debts are given. Total bad debts of the year are given. For the year 2014, 15 and 16. For there might be a possibility that the yearly bad debt breakup will be given on different dates and different customers. And this is a possibly a practical situation, but in this case the bad debts are given totally for year 14, 15 and 16. These are the amount of out account receivable trade receivables at the end of the accounting year, and this is the information. These trade receivables are at the end of the year, so obviously these bad debts are already excluded. Okay, if examiner states accounts receivable at 31st December, if examiner do not use these word, it is very obvious. It is obvious that these bad debts are already recorded. But if the examiner states that these trade receivables are not yet recorded, then we have to make the accounting entry and reduce the trade receivables to arrive at the final balance. Acha, these are the percentage of provision for doubtful debts for each year. What is the first requirement? The first requirement is to prepare bad debts account. So bad debts account is a very simple bad debts account. In bad debts accounts, there will be no ending balance at the end of each year. So I am right now I am giving, first of all I am telling you, I am sketching a format of the bad debts account. So first of all, bad debts come on the debit side. Bad debts are debited trade receivables. This is year one. Suppose this is year one. There are two bad debts at two different dates. Okay, so both the time bad debts are debited, and at the end of the year these bad debts are transferred with the total amount. The total amount of these two amounts will be transferred to the income statement, because there are two entries of bad debts. The first entry is the accounting entry of the bad debts of the transaction, bad debts debit, trade receivables credited, and second entry is the transfer entry, is the transfer of bad debts expense into income statement account. And when any expense is transferred, expense will come on the credit side, expense will be credited, and income statement will be debited. So examiner right now, the requirement is to prepare bad debts account, and there are 3 years. So we have to prepare year-wise entry, the year-wise bad debts recording entry and the transfer entry, and then move on to the next year. So first of all, 2014. So in 2014, the amount of bad debts, the total amount is 2480. Okay, and when total amounts of the bad debts are given, when the total amounts of bad debts are given for the respective year, the date will be December 31st. First of all, bad debts will be debited because it's an expense account. The reference will be trade receivables, and then we have to transfer this bad debts to the income statement account. So income statement will be debited and bad debts will be credited. So right now I am preparing bad debts account. So I'm crediting bad debts, okay, with the transfer entry. Now the account is closed. There will be no ending balance of bad debts and opening balance of bad debt at the start of the year. Okay, there might be a bad debts balance between the accounting year, but there will be no opening balance of bad debts at the start and end of the accounting year. Now move on to 2015. Now we have to repeat the exercise that we have done now. So trade receivables will again be debited with the amount of 5216. So this is a repeat mode on, and this is a simple thing. Now move on to 2016. Again trade receivables, and this time is 10,620 and 10,620. So this is a very simple bad debts. No? Now the second requirement is to prepare allowance for doubtful debts account. The second requirement. This is the second requirement, the part B requirement, to prepare in short form PFDD account. So this account is a technical one. No? So what we have to do first of all, wait a minute. So first of all, we have to calculate the provision. Calculation of provision is very important thing. No? So first of all, we will calculate provision, the working of the provision here. No? So first of all, we have to calculate 14 provision, 15 provision, and 16 provision at the end of the accounting year. The value of trade receivables is 84,000 into 5%, and the value of trade receivables at the 15 is 154,000 into 4%, and the value of trade receivables at the end of 16 is 172,000 at the rate 3%. So right now I have my calculator is in the different row. Give me 1 minute and I will be back. Uh, so now let's start. 84,000 into 5% is 4,200. So this is the first time provision. No? This is the creation of provision for doubtful debt. First time, because this is the first year and this is the creation of doubtful debt. Okay, 154,000 into 4% is 6160. This is the provision at the end of the year 2, at the end of year 15, and then 172,000 into 3%, and this will be 515,160. So now first of all we will be preparing accounting and journal entries, no? So this will be easier. So what will be the journal entry at the end of 31st December 2014 and at the end of December 2015 and at the end of year December 2016? So this is the first year of the provision, creation of doubtful debts. Income statement will be debited and provision for doubtful debt will be credited. I am using right now abbreviation for the income statement and provision for doubtful debt as well. But in the exam, you have to write full income statement and provision for doubtful debts. Okay? So income statement will be debited and provision for doubtful debts will be credited. Okay? And from the second year, if there is an opening balance of the provision. So in 2015, the balance of the provision at the end of the year is 6160. The the at the end of the year 2015, the balance of provision is 6160. Okay, and the opening balance of the 2015 is 4200, because the closing balance of 14 will be the opening balance of 15. And from the if from the second year, or if the opening balance is given, we have to charge provision on an increase or decrease basis. So in 2015, provision is increasing from 4200 to 6160. So provision increases in the year 2015 from 4200 to 6160. So 6160 minus 4200, the amount of the increase amount is 1960. So the entry will be, income statement will be debited, and provision for doubtful debt will be credited with the amount of 1960, because you cannot charge the full provision if the opening balance is given. So you have to take the difference, and the closing balance of 14 will be the opening balance of 15. Right now we have calculated the closing balance at the end of each year. So the closing balance of 14 will be the opening balance of 15. This is the closing balance. This is the closing balance of 16, which will be the opening balance of 16. Okay. So in 2016, provision is decreasing. How? The the At the end of the year 2016, provision amount is 5160, but at the start of the year, provision is 6160. Okay. So the difference is, so the at the end of the year 2016, the provision is 5160, and at the start of the year 2015, the opening balance is 6160. So now what we have to do, we have to take the difference, and this difference is decreasing. We have to take the difference. So 6160 minus 5160, and this is the provision is decreased with the amount of $1000. So in this case, we will make an accounting entry, provision for doubtful debts debit, because when provision decreases, it will come on the debit side, and income statement will be credited. This will be charged in the income statement as an expense, and this will be an income, and it will come in the section other income. So these are the accounting entries of the provision for doubtful debts. In this case, examiner has not asked you to prepare accounting entries. Okay, but examiner can give you the accounting entries. In this case, we have to prepare the account. So let's move how the accounts will work. Accounts will exactly work. We have if we know the basic entry. So let's move to the next page. First of all, the provision for doubtful debt account, and there is no opening balance at the start of the year 2014, because it is this is the first year of provision. There is no provision. Always remember, there is a provision for doubtful debt sketch. Provision opening balance will always come on the credit side, and provision ending balance will always come on the debit side. And if the provision is increasing, the entry will come on the credit side, and if the provision is decreasing, the entry will come on the debit side. And I'm making a star, it means entry will come on any one side. There is in each year, there either there is an increase or decrease. Okay, सही है? So the first year provision, let me go to the next page, previous page, and 4200, 6160, and 5160. I should write it now. This is 4200, 6160, and 5160. Okay. And the first year provision will be charged full 4200 December 31st. The reference will be income statement because the accounting entry is income statement is will be debited. Okay, and right now we are preparing provision account. So provision will come on the credit side. Now we have to do balancing, and the larger side is the credit side and the smaller side is the debit side. And in the provision case, either provision is increasing or decreasing. Balance CD, the shortage will always be on the debit side. It means debit side will always be a smaller side and credit side is always a larger side. Till 2015, Jan 1st, first of all, I will put the opening balance, and the opening balance is 4200. Closing will become opening balance, and in this year, provision will be charged at the end of the accounting year, and we have to take provision amount of 1960. Let's go to the previous page, because 40 provision is jumped from 4200 to 6160. So the increase of provision is 1960. So provision is credited. Now again we have to do the balancing. The larger side is the credit side, and December 31st. So the balance CD will be 6160. Exactly the same balance which we have calculated, because these are the ending balances. So in 2016, first of all, we will put the opening balance, and now in this year, provision is decreasing by $1,000 from 6160 to 5160. Provision is decreasing by $1,000. Okay. Larger side is the credit side, smaller side is the debit side. Now take the balance CD, 6160 minus 1000. This will be 5160, and the closing balance is 5160. And the new balance PD is, you have to always put the new balance CD of the year 2017. Okay. We have to you will be asking, sir, we have to prepare accounts till 2016. So why we have to show 2017 opening balance? You have always, this is always a requirement, that always put the balance BD. So we are done with the part B requirement, and now let's move to the last requirement. And the last requirement is to prepare SOFP extract. SOFP extract. Why they are saying SOFP extract? Because we right now we are not preparing the full income statement of each year. We are only showing teaser of the income statement belonging to the trade receivable section, the current asset section, and the trade per and the most relevant topic, most relevant information right now is of trade receivables. Okay, so we have to only show the information of trade receivable. That's why I did an SOFP extract, and we have to prepare this extract at the end of 2014. Okay, so what is the balance of trade receivables at the end of 2014? The provision balance is 84,000, and we have to deduct less provision for doubtful debts, and the opening balance is 84,000 into 5%. The closing balance of the first year is 4200. 4200. 4200. So the net amount is 84,000 minus 4200. that is 79,800. These are called the net trade receivables. Now we have to move forward to the next accounting year. So the trade receivables at the end of year 2015 is 154,000, and provision for doubtful debt is 6160, and this is 147,840, and the provision value at the end of 2016 is 172,000, 172,000 to 3% is 5160. So you have to take the ending balance. You don't have to take the difference as in the case of income statement. We have to take the ending balances at the end of each year. So this is all about the question 25.4. We had done bad debts account. In bad debts account we had bad debts account. The next is allowance for doubtful debt account. We have also prepared one extra requirement of the journal entries of the provision for doubtful debts, and the last but not the least is SOFP extract. So I hope this will give you a very clear idea. I'm waiting for your questions, queries, feedback. Okay? Feedback is very important. Two-way communication is very, very important in all the classes and every aspect of life. But in online classes, these feedbacks are very, very important. सही है? So I'm waiting. ठीक है? Pose your questions. Assalamu alaikum.